Hello, and welcome to the June Dairy Market Update. This month, we'll be covering our outlook for the upcoming season, reviewing the current situation, both here and globally, and looking at how upcoming events could affect the rest of the year. UK milk production has been hitting 20-year highs since last winter, boosted by a season of increased concentrate feeding that continued even after drought conditions ended last autumn. In the first 3 months of 2019, cumulative production was up 3.4% year on year. Imports were also higher than normal in the first quarter of the year in reaction to the potential threat of import tariffs. Import volumes of cheddar cheese were around 50% higher than last year. Combined with the higher production levels domestically, storage space has been under pressure. Meanwhile, poor quality forage and a reduced dairy herd limited milk deliveries across the EU. The knock-on effect on product availability has helped to support prices on wholesale markets and, in turn, keeping farmgate prices above the 5-year average for the majority of the year. While the UK has not experienced the same tightness in product availability, the links between the EU and UK markets has helped to insulate prices here. In the 2018-19 milk year, the average farmgate price remained in the region of 29 pence per litre, which is slightly above the 5-year average of 27 pence per litre. Globally, milk production looks to remain tight through 2019. High input costs and low farmgate prices have squeezed margins in Australia, the EU and the US, leading to reduced collections. Product availability in the EU is estimated to be generally low, with the exception of butter, and competitive pricing for EU products is driving good export performance there, while the reduced milk production has limited any excess stock buildup. Meanwhile, China's import demand is expected to remain strong through 2019. With demand for alternative protein sources arising from the ASF epidemic, there may be a price incentive to redirect dairy cows to the beef market, reducing milk supplies. Overall, supply and demand appear to be well balanced, and commodity prices are therefore expected to remain firm at a global level. Domestic prices may, however, show a different pattern, as high milk production weighs on the market and storage capacity for the additional production is limited. The need to sell excess milk onto oversupplied spot markets or hold product as stock may reduce market returns for processors. Uncertainties around Brexit outcomes could also affect market returns, particularly if processors build stocks in EU markets in an attempt to reduce the risk of high export tariffs. Any reduction to market returns could then add downward pressure to farmgate prices later in the year after the typical 3 to 4 month gap. Growth in milk production, however, is expected to slow in the second half of this milk year. And while lower pricing may have some impact on production levels over time, the smaller dairy herd and an expected drop in fertility due to the hot weather last summer are the main causes for this slowdown. More detail on the outlook can be found on the AHDB Dairy website using the link below. Keep an eye out as well for our cross-sector outlooks, which will be available shortly.